All right, it's 2 o'clock, and we're getting started with today's farmdoc webinar entitled Updated Supply and Demand Price Prospects for Corn and Soybeans. I'm Scott Irwin here with my partner Todd Hubbs, and we're going to update the supply and demand situation in light of this morning's USDA August crop production report and the WASDE S&D estimates that the USDA has updated as well. So always a big day in the markets when the August crop report comes out. So let's get started. So one of the first big headline numbers that came out today in the August crop production report was the USDA's first survey-based estimate of corn yield. Good reminder, previously for the 2020 crop, the USDA estimates were basically a trend adjusted estimate. That's what was released in May, June, and July. The USDA estimate in August is the first major survey-based estimate. Like last year, a change from previous years, this estimate is largely based on only the farm operator survey. In previous years, they had both the farm operator survey and the objective yield survey. So the USDA estimate that was released today was 181.6 bushels versus the average trade guess of 180.4. So marginally above where the trade was, but I would classify it not as a major surprise. USDA's trend estimate was 178.5. That's also what we use. So we're coming in at a little over 3 bushels above trend based on this estimate released today. So we knew we had good crop conditions and that we had the potential for a good crop in 2020, and this survey confirmed that. And again, we'll talk in a minute about that. It is important to also recognize that the USDA estimate is as of August 1st conditions, and we definitely had a major weather event on Monday. So we'll talk about that in a few minutes. Next slide.
Yeah, Scott, just a reminder, that we had a typo there. It was 181.8 in the report.
Thank you.
Yeah, we got it. Yeah, no problem.
All right, 181.8. So I'm just the guy reading the teleprompter, Todd.
Yeah, that's my vote. Yeah.
Okay, and here's what these trend deviations for U.S. average corn yield rounded look like. You can see that outside of 2019, recent years have uniformly been above trend, and we have to go back to more than a decade, about a decade ago, to see a sequence of years below trend. And so right now, based on August 1st conditions, 2020 looks like another year above trend. All right, next slide. This chart provided by the USDA shows the yields on a state-by-state basis, and then the color coding versus last year. No surprise with last year being a down production year, that virtually all of the major producing states have yields substantially above last year. Some notable numbers state by state. Notice the northern swath of states are projected at records. South Dakota 167, Minnesota 197, Wisconsin 181, Michigan 168, and even New York at 167. So the northern growing areas have had an outstanding season. Illinois coming in at 207, not quite a record, but I think Todd and I wouldn't be surprised if we eventually get there. And then also some very good yields in the Mid-South, Kentucky, Tennessee. Probably a number that stands out that might certainly be arguable at this point is the 202 bushel projected average for Iowa, given what happened with the windstorm on Monday. And we'll talk about that in a minute. Next slide. So, yeah, when you're talking about yields, you have to talk about the derecho. I'm still not sure I got that right, Todd.
Close. That sounded good. Yeah.
All right, we were talking earlier about getting that stupid word pronounced correctly. But anyway, this is a picture from west central Iowa of a typical cornfield out there, and you can see a good chunk of the field is laying flat. Not quite flat. This field, you see examples of fields where it's truly entirely flat. You can see a variation by variety. And so there's substantial damage. It's very hard to assess both the extent and then how much it will impact final yield at this point. We think it will have some impact in Iowa and smaller areas of northern Illinois, but still just something that introduces additional uncertainty and causes us to be at this point a little bit less optimistic about the U.S. average corn yield than the USDA, but not by a large amount. Yet we'll need to see clear evidence that the winds really completely destroyed fields. It's certainly going to create, if nothing else, massive harvesting problems throughout a big swath of Iowa. Next slide. So when we put the acreage and corn production together, the USDA came in at 15.278 billion bushels versus just a little bit higher than the average trade guess with the higher yield. And so that puts us, at a new record production level for corn. So we're, as of August 1st conditions, have plenty of corn around for 2020. So you can see this is the surprise from the report. This is just the USDA reported or printed number minus the average trade guess. And you can see that we had, interesting enough, our sixth straight bearish surprise in the August USDA crop production report. Although at 108 million bushels, it really was pretty negligible, and it was not a major shock. The market absorbed that without much bearishness to prices. In fact, the prices today edged up a little bit. Next slide. So we know that there is always some potential for changing the U.S. corn yield estimate from August until the final in January. And here you can see the record. And in recent years, outside of a couple of years ago, maybe plus or minus 3 bushels is not at all unusual. And we've seen years where we've had even bigger changes. So we have to keep that in mind as we could go forward, that ordinarily there is a swing up and down in USDA yield estimates. August is the first survey-based estimate, and it is subject to some considerable change. And then we have the added uncertainty from the windstorm on Monday that, potentially could swing yields somewhat lower. Next. And here we have, rather than the yield side, the harvested acres in August relative to the final. And you can see here we've had a definite tendency in recent years to reduce harvested corn acres from August to the final, not by huge numbers, but it wouldn't be unusual to lose 500,000, 600,000, 700,000 acres by the time we get to the January final estimate. Do want to make one point that this year the USDA did not use the FSA reported acreage that the FSA collects as they did last year. They did last year, and they released it simultaneously with the crop production report because of all the uncertainty with late planting and prevent plant. this still is an interesting issue, and I think that's in the next slide. And we just, in fact, they released the first FSA round of acreage data at 2 o'clock, and so we haven't had a chance to look at that. But we just want to remind people that there's still a puzzle that we talked about after the June 30th acreage report of where did all of those missing principal crop acres go, and in particular, the roughly 5 million acre decline in planted corn acres. Where did they show up? And we had talked about that most likely being in prevent plant acres, and we'll get our first shot at totals on prevent plant in that FSA data that was just released at 2 o'clock. So as soon as we're done, Todd and I will probably be racing over to see what that data actually says. But that's still on the acreage side, the riddle that has to be solved. What is going on with the principal crop acreage total, and how did that get allocated across corn, soybeans, and prevent plant? So be looking for some information on that in the next few days. All right, now we want to turn to the use side. This chart shows the monthly corn use for ethanol, and what we see here is the by month for the last 3 marketing years, and the far right purple bars represent what we need to reach the USDA's estimate for 2019-20 of 48.50. We think we might be just a skosh behind that, but it looks like it's going to come in pretty close to that 48.50 number. Next. Exports, of course, a very interesting story on what's been happening very recently with the export sales of corn to China. The USDA's export projection for 2019-20 is 1795. The total to date is 1640, with unshipped sales of 200 million bushels, which means we need 37.6 million bushels per week, and the average is slightly above that. So we think that we're going to come in again very close to that 1795 for old crop corn exports. Moving on to feed and residual use, USDA's projection for the 2019-20 marketing year is 5.6 billion bushels. We need to get 875 million bushels used in the fourth quarter to use that much, and that seems like that could be a bit of a stretch yet. So if anything is a surprise when we get the final stocks number at the end of September, I would guess Todd and I's bias would be that we might see a 50 or 75 million bushel disappointment in that final stocks number, reflecting a bit of optimism on what feed and residual use will be for the 2019-20 marketing year. Just have to wait and see, but it's important to note that there could be just a little bit of optimism built into that projection from the USDA. Next. So here's our old crop balance sheet, and basically our only difference from the USDA's numbers released today in the August WASDE is over there in the ethanol. We're 10 million bushels lower than the USDA, and so that gives us ending stocks just 10 million bushels higher than what the USDA is projecting. Again, really a negligible difference. Next. So here's the really big item. Right now, everybody is adjusting their new crop balance sheets for corn in the US right now. The left column, the numbers in blue, are the numbers released today in the USDA's August WASDE report. And on the right are Todd and I's forecasts, and we'll walk through where they differ from what the USDA provided earlier today. We're going to put planted and harvested acreage for corn down 500,000 acres because we think that ultimately some downward revision in corn acres is going to happen in squaring the puzzle of the missing principal crop acres, and it was kind of a slow end to the corn planting. So we have a small adjustment down there in planted and harvested acreage. With a nod to the windstorm that happened on Monday, we dropped the U.S. average corn yield from 181.8 to 181.5. It could be even a little bit more than that, but again, there's a lot of uncertainty about the impact of the windstorm on yield. It's also important to recognize, even as big a producer as Iowa is, I think it's only about 15-16% of total national production of corn. So that, with our beginning stocks of 2238 and total production of 15210, we have a total supply of 17473, which is just a bit less than what the USDA projected. The consumption side of the balance sheet is very interesting. The USDA put in feed and residual use for next year at 59.25, a pretty aggressive increase over where it was this year. And as we just noted, we see some possibility that 5,600 for a current marketing year might even be a little optimistic. So going all the way up to 59.25 for the next marketing year, even though we do have low prices for grain, seems kind of optimistic to us. So we're going to back that off by 50 million bushels, 58.75, and at the same time recognizing that even 58.75 may be a heavy lift with the state of the general economy and still uncertainty with the COVID-related issues. Ethanol, once again, the USDA is pretty aggressive, projecting 5,200, and we're going to, with a nod towards a little slower recovery in the economy, project that at 5,150. And then the USDA is super aggressive on exports. The market seems to be buying into the USDA numbers today. The USDA for corn's at 22.25. We just are not quite that optimistic, and so we bumped up to 21.50 for the next marketing year, putting our total usage at 14.6 billion, giving us ending stocks of 28.73 or 19.7% of total consumption, and we have an average price of 320, which is actually, even though we have larger stocks, a little bit higher, a little bit more optimistic than the USDA. I don't know. I'll stop there. See, Todd, what comments you might want to add on the new crop balance sheet.
Well, I know that price is higher, and some people might be scratching their heads. I personally believe, and I think maybe you feel the same way. We could go lower, and I think it'll show up in basis more than anything. It feels like 320, 325 is where the market is in the futures. There's a little bit of carry, which we'll talk about later on corn prices. And I just 310. It could be that could be the case if this all plays out. But with the kind of use numbers they have, 310 seems awful low to me. I will say that 51.50 on ethanol is still well above where we've been as we've recovered from the ethanol plant shutdowns, where we've leveled out a little above 900,000 barrels a day. That's still down about 10% from last year's use. And if that continues into the indefinite future, we're below 5 billion on ethanol once again next year. I know China's bought over 200 million bushels of corn. They're getting close to their tariff-free quota level. They may expand it. I would be surprised if they did. We could see strong corn exports at these low prices. And I do expect strong corn exports, but to hit 22.25, that's That's a good year. And I think 2150 makes more sense. I think we're going to need to see the September 1st stocks to get a good idea of where feed residual is and maybe reset for next marketing year. And I'm hopeful 58.75 is right. I'm hopeful 59.25 is right, but I think that might come in a little bit lower. So I'm hopeful for some strong economic growth and some recovery from COVID. And we see these corn use numbers really bump up, because even in a worst case scenario, it looks like right now on supply, we're going to be well above 17 billion bushels. So we need a recovery.
Yeah, definitely. I guess if I was going to summarize my view of the USDA's WASDE use projections today, they seem to bit on the aspirational side. That's the way I would put it. That's my own personal view. So let's go to the next slide. So talking in terms of marketing strategies, this shows the new crop corn basis in South Central Illinois. And you can see that it has gotten stronger over the summer, and it's certainly stronger than 2020, 2018. So the market is basically right now encouraging some current sales. I guess that's the way you would, is that the way you would put it, Todd?
Well, it's been flat around 28 to 30 cents. When you look at country elevators, it's a little bit weaker than this. This is an average.
Oh, I'm sorry, I looked at the wrong line. It's 2020 is.
Yeah. Last year we saw that big run up because there was the supply scare, right? And we saw basis get close, and in some places it was even. This year it's been relatively stable and flat all through May, June, and July, and I think that'll continue because the crop's going to be pretty big here in Illinois in particular. I think that kind of 28, 29, 30 cents is where we're going to be for a while.
Yeah, that's, and again, I want to correct my error. I was just looking at the 2019 line instead of the 2020 line.
Yeah, that's a head scratcher.
2019 is orange, and I just got those flipped around. So I wanted to correct what I'd said earlier. Let's go to the next slide. And in a similar way, we do see some pretty healthy carries in the grain market. They're out through May, roughly 20 cents. Again, not by any means record large, but there is some carry rewarding storage, particularly on farm. So with that, I think we need to switch to soybeans, Todd.
Yeah, let's do soybeans. So USDA came in at a 53.3 bushel an acre yield, record large yield with their August 1st forecast. I think a lot of people think that may not be the case. In the 8 to 14 day weather outlook, it's been cooler but much drier. I will say this, if you follow the weather as much as I do, you will know this year that those 8 to 14 day weather outlooks aren't worth the paper they're printed on, based on the kind of weather changes we've seen through the Corn Belt. So I wouldn't bet the farm on, it drying out completely, particularly over the Eastern Corn Belt for the next 2 weeks, and seeing some deterioration in the soybean crop. We've got quite a bit of moisture, and 53.3 might seem high, but I will say this, and I don't know what you think, Scott. I think it is feasible that could be the yield this year. And when we get to the state, I'll talk about it a little more. They were originally 49.8, and everything's sort of set up this year, almost ideal conditions, with particularly here in Illinois, with the rain that came in and it cooled off. It's been relatively cool here in the early part of August. So I think we're going to have really good yields here in Illinois and in a lot of other places. When we think about the deviations from yield for soybeans, they've had a tendency over the last few years to be above trend yield. We were using a quadratic, and this is off of a quadratic trend. If anybody's interested, Scott and I did a lot of work earlier this summer on weather models, forecasting corn and soybean yields, and thinking about how to set this up. And there's definitely much stronger yield potential through the country in general for soybeans. There's been a break, I think, in the 2010s, maybe the early 2010s. And the idea that the USDA's yield might be a little high this year could be true, but they rarely miss in the last few years too high on the soybean yield. So that's something to keep in mind. We go state by state. It looks like Illinois is setting up for a record year for soybean yields at 64 bushels an acre. You know, it's all across the Eastern Corn Belt. We're clocking record yields. And down in the Mid-South, Mississippi putting out at 55 bushels an acre. And up in South Dakota, Nebraska, out in the plains, also record yields. So, you know, we're going to definitely need to see some kind of deterioration over the next few weeks to a month to bring these soybean yields down to where I think maybe the market's trading on these days. They may believe the demand numbers USDA put out, and there's a lot of good reasons to buy into that. But at a 53.3 bushel an acre yield with the potential maybe for it to go a little bit higher, I hope not. But the potential is there. That's a lot of beans out on the market. So that puts production at 4.425 billion bushels, which was quite a bit above the trade guess, and that was mainly due to yield. Dang near a record yield or record production level for soybeans this year, recovering from basically our 12.5 million acres set aside we used last year with prevent plant. And this is on a mere 83.8 million acres. So imagine what it would be like if we were putting in 90 million acres of soybeans this year. We look at August production, the USDA's August production forecast minus average trade guess. A little bit of surprise here, 167 million bushels. The trade wasn't anywhere close to 53.3. And I think that we're seeing that getting traded on today. I think there's a lot of negativity around that yield. It's somewhat of a surprise. You can see that the trade has been off the, let me just put it this way. There's been a lot of years where the trade's really been off. And if you go back to the slide where how far off was USDA's soybean yield, it was 180 million bushels off. Let me put it to you that way. So I guess I'm just hinting at, yes, 53.3 seems high, but you know, be careful about short, you know, thinking that the USD is way off on that thing. We look at the U.S. final soybean yield estimate. Last year, they brought it down a little bit, but they've been pretty dang close over the last couple of years on the August forecast. And you know, after a few years there where they're a little bit too low, they've been really close for the last 3 years to where you're looking at barely missing the previous 2 years on the final January yield estimate. So those out there marketing soybeans, keep that idea in mind. I think it's a good idea to keep that in focus. The place where we've had a little issues is harvested acres of soybeans, you know, minus the August forecast. Last year we saw it drop precipitously. There's been a couple years in a row where we've been well over 500,000 acres difference. So there's been a wide variety over the last decade of misses on harvested acres. I'm worried this year, and we'll talk about a little bit the 2021 balance sheet, that they may be a little low on harvested acres this year from what Scott discussed about rounding out the principal crop acres. Since USDA didn't, you know, they went back to their old method of not using FSA data. I'm curious to see how many soybean acres got prevent planted and how many corn got prevent planted, or final planted acres of soybeans will be, and what that means for harvested acres.
Todd, if I can interject.
Go ahead.
I just pulled up the FSA report for prevent plant so far. Corn is at 5.374 million acres of prevent plant, and soybeans at 1.223. The total is just is 8,990. So it's basically 9 million acres of prevent plant. So it all adds up.
Yeah, it does all add up. So I think when we get into October, probably maybe October for maybe the September crop production report, but it sounds like maybe October before we get a really good rounding out about how many acres there are in corn and beans.
Right. So that data. So that puzzle just got solved, Todd.
Yeah.
It was prevent plant, 9 million acres.
Yeah. So basically, if we went back to the slide before, we take principal crop, CRP, and prevent plant, we're in that 343 to 345 million acre range.
Yep.
I know when the January report came out, people were hypothesizing a lot more hay acreage. And on the margin, I think some of that happened. For the most part, it went into prevent plant.
Yep.
So let's talk about 1920 demand a little bit. USDA is projecting 1.65 billion bushels for exports in 1920. To date, I've got around 1.54 million. We've got about 256 million bushels of unshipped sales. We need about 31 million bushels a week, and recently we've been doing a little under 20. There's a lot of outstanding sales for this current marketing year that need to go out the door in the next few weeks. There's always the possibility that some of those get rolled over into the next marketing year, and it comes up a little short on USDA's projection, but I think it's pretty close at this point. Crush, we've had a great crush year. USDA raised crush again today to 2.16 billion bushels. We're definitely on pace to hit that if we continue to see the kind of crush levels we've seen over the last few months. I don't think there's any reason not to expect to see these kind of crush numbers. So I think it'll be pretty close to 2.16. I think the big question about crush is where will it be in 2021? And I'll talk about that a little bit more later. So when we get to the soybean 1920 balance sheet, we're basically with the USDA. We're really close to the end of the marketing year. We are right where USDA is. All the numbers are starting to come in. There may be a little wiggle room on this before it's all said and done, but it's going to be pretty close to a carry out of 615 million bushels. So here's where we're getting into trouble with the 2021 USDA balance sheet. Much like we took 500,000 acres out of corn, we added 500,000 acres, and the left-hand column's USDA's August WASDE forecast, and the green one on the right column is what Scott and I have been forecasting for soybeans. We added 500,000 acres to soybeans. It may not be that much, but I think we may see it end up being there, with harvested acres moving up to 83.5 million acres. We're sticking with the 53.3 right now. I know I have a lot of yield prediction models I use, and the models aren't at 53.3. I don't know about you, Scott, or the models you use, are they at 53.3? I'm lower than that.
Yeah, what I look at and the stuff we did in our articles this summer on FarmDoc Daily would, suggest something 51, 52. So we're a bushel or two below that. But again, it's not a huge amount.
It's not a huge amount. So with that 53.3, we're looking at production 4.45 billion bushels. We're carrying the beginning stocks at 615 with a little bit of imports at 15. We get 5.08 billion bushels of supply. Crush at 2180. We've seen really strong crush all this year as exports have sort of waned. The crush margins are still pretty good. I know when you look at Decatur, they've weakened a little bit over last month, but we've seen soy oil price go up above 30 cents a pound. Now, we have seen weakness in meal price, but I think with the amount of livestock that are out there, we could see an increase to 2180. There's definitely that amount of crush capacity in the country with some of the new plants we've had over the last few years. So I think that's a pretty good forecast. It does mean that we carry through on these livestock numbers that we had over the last marketing year. And that sort of ties back into what will restaurants be doing and what will the economy be doing when we get deeper into 2021. Still a lot of uncertainty about that. USDA is forecasting 2.125 billion bushels of soybean exports in 2021. That's on par with what we did in 2017-18 before the trade war started. Now, there have been a lot of sales to China, and they've been buying some soybeans in 130,000 metric ton to 230,000 metric ton doses almost every day for the last week or so. They're still a long way away. They bought a lot of beans from Brazil in the first half of this year. They're going to buy a lot of beans from Brazil in the first half of next year as well. And when you think about, can we hit that number? Yes, we can. That implies really strong buying from the phase one trade deal with China, which I'm hopeful about. But even with that, getting up around 2.1 billion bushels is a lot of exports. I think it's important to keep in mind in 2017-18, let's see, Brazil and Argentina did about 5.8 billion bushels of production. This year, they're forecast to do about 6.78 billion bushels of production, which is dang near a billion more bushels of soybeans. They do have a lot of domestic use for beans, but most of it goes out the door. And I think there's going to be really strong competition when we get into their new crop next year. So if we're going to hit 2.125 billion bushels, it's going to need to happen between September and February. And it's really going to be important to pay attention to that kind of pace. We need China to be well over a billion bushels bought from us. So Scott and I, hopeful we can hit that number, but a little bit doubtful. We're a little bit down at 2.075 billion bushels of exports for the marketing year. So that puts us at 4.4 billion bushels of total consumptions compared to USDA's 4.445. We have a slightly higher ending stocks at 680. So our price is coming in at a 15.4% stocks to use, only a nickel down at 830. When you look at the current futures prices, which I'll talk about in a little bit, we're well above that. So I think that's something to keep in mind as we move through the market year. When we get these rallies, these strong rallies on some positive news, you may think about getting some beans sold. We look at new crop soybean basis. This is once again South Central Illinois. The green line is 2020, just like corn, very flat, around minus 27 to minus 30, depending on where your elevator's at. And better than what we saw the last couple of years under the trade war. So this gives you an idea of what stronger Chinese buying does for our cash prices of soybeans here in Illinois. Better, still about 30 under. I think that'll probably continue with the kind of crop we're putting in Illinois with the potential. I don't think it'll weaken too much, but with the potential for it to weaken. So we got these, this is the forward curve on soybeans. And this is not the closing price because we had to do it before the market closed, but November's at about 879, 880, and I think it's higher than that now, maybe up around 882. And we see a little bit of carry in the market flattening out when we get into what would be the Argentine or the South American crop year. So is there some incentive to store? Maybe to think about pricing in January. Yeah, there's a little bit there, but not a huge carry, nothing to think about storing unless you really have some kind of storage marketing plan in place. So with all that said, we'd like to get to the questions before we get to them. We'd like to thank all of our farmdoc sponsors, and here they are. And we really appreciate them sponsoring the farmdoc project and all the work we do here at the University of Illinois. All right, let's do questions. This is my favorite part, Scott, the questions.
Yes, me too. Thank you for that excellent review. I'm going to start with this question. It says, didn't they get rid of the August survey? The answer is yes and no. So to review, historically, the USDA crop reports for corn and soybeans from August through November used two different surveys. The first is what is called the Farm Operator Survey, is where they simply survey farmers for what they think their yields will be. And they use in the past a second survey called the Objective Yield Survey, which is where they send enumerators out to the field to actually take measurements and send samples to a central office, and then they develop a completely independent yield indication based on those measurements. So the USDA historically in August had two different surveys that they would combine to come up with their published estimates. last year they changed and they dropped the objective yield survey from August. So there was one survey that was dropped starting in August of 2019 and was the same this year, that they now are relying only on the farm operator survey. And if you look at their additional materials they put in the executive summary, they also list an indication from a satellite model that they have from remote images. It's uncertain how much weight that they're actually really putting on that. When I've talked to NASS personnel, they consider that just supplemental information. So right now, it's probably the safest assumption is to say in August, they only use the farm operator survey, but then they go back to using the objective yield survey and a farm operator survey in September. So long-winded answer, but that explains exactly what the USDA is doing. You want to take the next one?
Yeah. So the question is, as regards to the recent storm, do you think that could have affected soybean production? I don't think it affected it that much, to be honest. It's not like corn, maybe a little bit. I haven't seen much damage in soybeans. Scott, have you heard of much damage in soybeans? I don't think it affected it all that much.
I have not nearly as much as for corn, and you wouldn't expect it to be. There probably was, it has to have been some damage. But
yeah,
I don't think there's nearly the level of concern as there is for corn.
Yeah. So I'll take this next one. What do you think is the reason for the rally in soybeans today?
Go, Todd.
All right, I will. That's what I'm talking about. I don't think a lot of people believe that 53.3 bushels an acre yield because they're looking at these 8 to 14 day weather forecast and the dryness that's in place, even though there's cool weather. Part one. And part two, that really strong export number USDA put out. And there's some support behind that with the kind of buying we've seen from China recently. And it looks like they're going to try to meet their phase one trade commitments. I find it a little hard to believe that we're going to revert back to soybean export levels pre-trade war, but maybe we will, and that would be good. But if you ask me why is it rallying today, very bullish on use, discounting the yield. That's what I think. Scott, what do you think?
Yeah, I think that's a reasonable explanation. I mean, I think you just find that there's a lot of bullishness surrounding existing and potential sales to China. So I think that makes sense to me.
Yeah.
Following that up with a question, Todd, I'll put it to you. What is your bull case for November soybeans and what kind of price would you expect under your bullish scenario?
My most bullish scenario would be what we saw in early July. I don't expect everybody to read or follow everything I say, but when we saw that rally coming out of the Acreage report, we got close to, what was it, 890 to 9 on November soybeans. Now, to me, that would be a nice pricing opportunity. Could we go higher? Sure, but it is going to take some serious buying and maybe some deterioration in the crop. To get crazy bullish, if we drop the yield a couple of bushels and China did come through with just tremendous amounts of buying, we could get back up above 9. I personally don't believe that's going to happen. So I'm in a point, you're thinking about marketing soybeans right now. We get these nice rallies. If you get to a place, if you got in your marketing plan, nice target prices and you clip through them, don't be embarrassed to sell some. I'm worried that price rally we saw in early July might be the high point for the whole year. And then again, tomorrow we could open up and do plus 20. Who knows? But I do think that is my reasonable bullish scenario. Getting back to that early July rally, ridiculous bull scenario will go a little bit above 9. What do you think?
I don't have anything to add. I would say only other wild card sitting out there is still on acreage. With that big of a prevent plant number, just right at 9 million acres, and it probably will go up a little bit from there because this is the first reporting month. Maybe there's the possibility for both corn and soybean acreage to go down a little more than we expected, Todd. That's a big number for a prevent plant.
Yeah. So it was what, about 6.5 on corn and beans?
It was 5 point, let's see, I've got them right here. I'll pull it up, exact number for you. 5.4 million on corn and 1.2 million on soybean. So they totaled 6.5 million acres on just corn and soybeans alone.
Yeah, that would be getting a little above 180 for both of them.
Yeah, exactly.
So, yeah, we could see them actually both come down a little bit. I expect corn to more so than beans, but I expect corn to.
And so I need to take a look at the planted and failed acreage numbers from FSA are also out, but I don't want to really report those because those are partial numbers, and I need to go back and look at see what is the typical pattern for the percentage of acres that are reported as of this date, and I just don't have that off the top of my head.
Yeah, I don't know, man.
Let's see. Question: do you think the corn price is going to still go down for the rest of the year? My answer is no. I mean, you're talking bids out in the Western Corn Belt before today in the 270s and the cash market, and the futures at 320. I'm just like you, Todd. I think we're at very low levels, even, and we're still not above 20% stocks to use ratio. And so I may not be bullish, but I'm also not very bearish from these price levels for corn either. I don't know if you want to add anything to that, Todd, or not. That's not a very informative answer.
No, I got what you're saying. Yeah, I guess is this a bottom, right, for corn? Is that 320 to 325 on these corn, sort of where the futures market bottoms out? It feels that way to me. And when you look at the fundamentals around it, the potential for fewer corn acres, and maybe, yeah, even if we raise yield a little bit, fewer corn acres and some really strong demand, if we're around at 320, the worry is like basis weakening severely in some parts of the country, which will drive down seasonal average corn price. It's not that I don't care about the rest of the country. Here in Illinois, though, which I think about the most, it looks like we're going to have a pretty good corn crop, but I think we can move it. And so for here in Illinois, I don't see it grinding down very much more through the rest of the year. It's sort of just a flat sideways kind of pattern with maybe some little runs on some positive demand news, or early frost. We can always hope for an early frost out in the Dakotas or something like that, or a short South American crop early in the next year. So there's always something out there, but right now, yeah, sort of grinding sideways for a while with some little jumps.
Yep, here's an interesting question. I'll let you take this one. I think it's really interesting and allows us to really continue to dig in on the use side for corn and even soybeans. Does Mexico's issues with COVID containment hurt their ability to import U.S. grains and oilseeds?
So I don't think it's going to hurt them severely, but I think it is going to hurt a little bit, particularly if they end up, I've been trying to figure this out too, and look at the news. They're they're not like, they're sort of like us. They've got a lot of code floating around. Everybody's sort of going about their business, maybe not lockdowns. And I think it may limit, their end use a little bit, but I don't think it's going to hurt too bad. I think you may see Mexico's corn and soybean exports be very close to what they tend to get from the United States, which is relatively stable.
But it does, I like that question because it does point out that we still have downside risks on usage due to COVID. And I recognize that there could be upside risk if, a vaccine is developed and widely available, say in the middle of the marketing year. But the risks do go both ways.
They do. For me, a lot of the COVID downside's domestic. With the restaurant issues and the changes in the meat supply chain, and as China recovers and maybe they don't take as much pork and beef as we hoped, we see the livestock numbers come down. Yet we're still more focused on the way our domestic meat supply chain and what that'll do to feed and what it does to ethanol. Export wise, Mexico in particular, Japan, Taiwan, Colombia, maybe a little bit of a hit, like I said, but I don't think it's going to be too drastic. For corn and beans, I feel sort of the same way about it, maybe a little bit, but right now I think our main exporters, China's the wild card with beans, but our main export countries may be stable.
Some more questions. Is the average price in the corn balance sheet the average farm price? And the answer is yes. That is the price that is in the WASDE balance sheet and that we're forecasting. I'm glad this person asked this question because it can get confusing because we are be talking about new crop futures prices in the same breath. And basically, the new crop corn and soybean futures prices roughly equal on average over time the U.S. season average farm price for corn. Again, that's a rough equivalence. And so that's when we say, okay, today, new crop corn futures, December futures for 2020 finished at, I don't know, 325. Then you would say, okay, that's a pretty good estimate of the season average price that's in the balance sheet. So that's where that discussion comes from. A couple questions before we run out of time here, Todd, relating to the FSA report that I mentioned. I do want to make one clarification. The FSA data that was released at 2 p.m. Central Time, 3 p.m. Eastern Time, and it's up there on the web. I mentioned earlier, but I want to clarify. Last year, the USDA released that acreage data simultaneously with the crop production and WASDE reports, and that data was used to make adjustments to planted and harvest acreage estimates in the August crop production report. But that is not the normal cycle for using the FSA data to, as the NASS likes to say, true up their estimates. The schedule will be going back to normal, which means that the USDA won't consider that FSA acreage in adjusting their planted and harvested acreage estimates for corn and soybeans until October, when they get a fuller set of reports. That's the normal procedure. So that means that this year, different than last year, confusingly, even though the FSA reports were available and released today, they did not impact the June acreage estimates that were in the acreage report. So that can be really confusing how all of that works, but that's the way it is. I don't know. Did I add to the confusion or help there, Todd?
I don't know, because I know what you're talking about.
Good.
Right. So I know what you're talking about, so it made sense to me, but that doesn't mean it made sense. Let's put it that way.
Okay. So bottom line is they used the data last year, they didn't use it this year, and they will use it in October. That's better. Okay.
Yeah, there we go.
There we go. I think that was better. And then, as Todd Gleason just mentioned, cotton acreage will be adjusted in the September crop production report based on the FSA data. And then another listener says, in the FSA report, the states listed don't add up to the grand total. Where are the other 2 million acres for corn? Good question. I don't know the answer to that. Do you, Todd?
I haven't had a chance to look at the report. So I'll have to defer on that question for right now.
Okay. All right. This is a very interesting question. What will PLC payments be next year for corn? Well, one part of that answer I can think, unless something dramatically changes, large, right, Todd?
Yeah, big. Yeah.
I mean, because the reference price for PLC is 370, if I'm not mistaken. Is that right, Todd?
Yeah, that's right.
So if it's 310 is the actual marketing year price, that's a 60-cent PLC price. But remember, that's only paid on base acres and base yield, and I think that's multiplied by 0.85, and there's payment limitations. And so you have to take into account all of those adjustments when you translate that into dollars per acre. But I would use this to point out and plug a ARC PLC tool that we have at the FarmDoc website, where you can, it's on our main menu on the FarmDoc site under tools. You'll see a entry for online tools. You go there and it'll say ARC PLC tool, and you can plug in 310 and we can figure out what PLC payments would be in your local area. So it's a great tool, and I encourage listeners to consult that as we have these kinds of questions. All right, I think.
Yeah, that's about it for the question.
Yeah, and one observation from Todd that's good too. He said, Todd Gleason said, I haven't looked, but remember the FSA figures continue to come in over time and are not yet complete. It would be highly unlikely for the corn acreage to equal the June figure. Two things. The reporting is not complete for FSA, and so that's why usually we wait till October. And also, not all farms are enrolled in the FSA programs, so that the FSA acreage numbers are always smaller than the NASS estimates for corn and soybeans. And so you have to take both of those into account when you look at the FSA acreage today. For example, the current planted and failed figure out of the FSA report this afternoon, Todd, was 81.121 million acres. Well, the NASS current estimate is 92 million acres. Does that mean then that the NASS estimate has to come down? No, not necessarily, because not all farms are enrolled in the FSA programs. You have to take that into account, and the fact that we don't have complete reporting. So, but that doesn't stop us from trying to use that data in an interesting way to see what it might suggest about future NASS adjustment. I'm sure Todd and I'll be looking at that very shortly.
Yep.
We have one more late question coming in here. A person asked, just to check, are the average prices for the bushels of corn and soybeans stated as futures or cash? They are stated as cash.
Yep, cash.
They are cash, but as a way of thinking, as a point of comparison, you can use the new crop futures prices as a alternative forecast of that cash price. So hopefully that straightens that out. Well, Todd, it is 3 o'clock, and I think we want to be signing off on time.
Yep.
Yeah, and I did want to, before we signed off, let everybody know that we are going to have a 4-part webinar series that starts week after next, that will be taking a look at policy and basic profitability projections for 2021 in the midst of this COVID pandemic. So it will kind of build on the market analysis that we've done here. And we'll be shortly sending out emails with the registration link for that series. So please be looking for that. And we'll also be blitzing everybody on social media and lots of emails on that. So be looking for that series. It's going to be a great 4-part series to kind of provide a benchmark as we go into the fall harvest season in terms of the economics of Corn Belt agriculture. So with that, I want to thank my partner, Todd. I also want to thank Jim Baltz, our producer, who always does an amazing job. And again, thank you to all of our sponsors. And we wish everybody a safe and healthy time until our next webinar. Thank you very much.